Good evening. Ira Epstein of Linn Associates with their financial market wrap-up for this Thursday, the 27th of August, 2020, about 6:45 p.m. Central Time. Well, a couple of events today. We certainly had the kickoff of the Jackson Hole Symposium. It was interesting. The Fed took a different stance. The stance now is that they're focusing more on unemployment numbers. They want to get them back down. They don't know what the new norm is, but they're not worried about it. And they're not going to be aggressive on inflation. In fact, they're going to start averaging inflation rather than targeting inflation. And from the sounds of it, some of the Fed governors afterwards came out and they wouldn't be nervous even if you went to 2.5%. Well, neither would most of us. The problem has been, and this didn't come out well, they haven't been succeeding in getting inflation going at all. It seems to be that they keep dropping interest rates and inflation numbers slip with it. So now you have a negative interest rate. If you think that interest rates, let's just say the real inflation's 1%. Let's just say that it's that. And your 10-year note is at 0.66. You got a negative rate. What can I tell you? If inflation's 1% and you take a look at the one-year market, you're underwater there, big time. That's not creating the inflation. What's going to create inflation is getting people back to work. The Fed said that. So it's COVID-19. I just want you to understand the reality. On a positive note with that, I think a breakthrough note on it was Abbott Laboratories getting Fed approval today for a $5 test. You take it, 15 minutes later, right then and there, it's not sent anywhere. You know if you have COVID or not. Can you imagine now what that's going to do for the air industry? What about hotels as you check in? What about being able to go to a movie theater? I can go on and on. What about a restaurant? Can you fill them again if the people that all come in take this test, wait 15 minutes or less, and get the result? I don't have the answers to it all, but this is what I've been writing in my full research report. I have been writing this week that science and industry have come together, and they are giving us ways without a vaccine or a treatment to deal with COVID-19. And I think that I've been leading my subscribers down that road and doing an effective job of it. Today I was jumping up and down because there I am with it. This isn't medicine. This is a way to detect the disease, not stop it. But that opens the door for socialization again. I like it. All right. The market liked it too because the stock market came back. You had a wild day in the metals, and you had a misunderstanding day. I think what all this means in currencies. Is this bullish or bearish the dollar? We haven't seen the full impact yet, and the market hasn't made its decision. We'll see that in some of the charts I show you in a minute. As for the S&P, you know, this is a runaway train. The NASDAQ's a runaway train. Who knows where it ends? Don't pick the top. Don't be the wise guy. When it ends, it ends. If you can't live with that, too bad. It's the way that it's going, and you don't really fit in then. Because the people that keep saying it's got to stop, they've been left behind. I watch on TV, oh, I'm doing the rotation. I get it, and I believe them. Why wouldn't I? But the simple fact is these indices have just run to the upside. They don't even stay in trends necessarily. Like here you went to a lower low, higher high. You have to have another indicator when that happens if you're locked into a trend. And I use the slow stochastic. I'll show it to you in a minute. I think you'd agree we've stayed over the 18-day average and we had a bullish crossover. People give it no credit. This is the 100-day moving average of closes. This is the 200-day. This is Tuesday, August 25th. Yesterday, the market crossed over, and today, following through, already new highs. That's a bullish crossover on the chart. So that part is also going. Everything I look at on this indicator is still bullish. It hits the upper Bollinger Band, it falls back under it, and what does it do? It keeps the embedded reading. When you lose that embedded reading, then I'm going to look for a correction back to the 18-day average. It happened back here. It happened back here when it did it, so why won't it continue to happen? But as of here, I think the shallow, and that's the only word I know how to use, shallow breaks are what the pros are still buying. Looking at those indicators, they're doing the same thing in the NASDAQ. You push on the Bollinger Band, you're not running away, you're not spiking away from it. You pull right back on it, and this is called riding it. Remember that term I used a couple weeks ago called gorilla glue? You tell me what you're doing. You're just riding on that band, you're riding on that band, not doing it in the Dow. Not the same market. Have the embedded reading, you get up to those bands and you back away. You haven't locked in, and the market that's really not been the same has been the Russell. And I know so many traders want to buy these small caps and say, oh, they're going to be the next play. Okay, maybe they will be, but they're not in the play right now. The others are making the new highs. You're not doing it in this index. I'm certainly not bearish. Hard to be bearish anything when everything around you is making new highs. In the VIX, what did we say yesterday? I want to come to this. Yesterday, we had lost the embedded reading, and I know I said it. Look at my video. I said, watch out. It's giving a signal here that it might make a run for this 18-day average now. Not only did it do that, it went right up to the Bollinger top and then gave it all up and came back down. I was jumping up and down because these are the things that, I count on so that my viewers can say to themselves, what he's saying makes some sense, and that's what it's all about. In the bond market, the traders in bonds are challenging the Fed. They're taking this market down. I heard today that some people say interest rates are moving higher in the cash because the banks have a lot of bad loans and the market's pricing it in as because of the COVID, businesses are going to start failing and you'll see what's going on and the banks are going to tighten up. That could be. I don't know. But I know that the trend is down, not up. Yesterday, right here, you made your run. And that was Thursday. Remember, we're on Friday trade already. You got as low as 176.4. The lower Bollinger Band is this low was 176.4. The Bollinger Band was 176 even. And you're bouncing a little away from it. That's still very much a target on the downside. You've still got the target of the 100. And this is the key average to me right now. The 100-day on the 10-year trend is down. You've hit it, and you're oversold. I'd be a bit cautious here. Any moves back over today's high in bonds and notes could be a signal you've run the course to the downside. You haven't done that, and until it's done, what's the trend in both? Still to the downside, but oversold here and oversold in the bonds unless they decide to embed over the next few days. In the dollar index, what did we do? This is how we looked coming in. So this is Wednesday. You have an outside day down. We have a pattern of higher lows. And then we stalled out. And past couple of days, you've been fighting right at this 18-day average. If the market drops, I'd be looking for the lower Bollinger Band as potential support with the market still fighting its battle right here at this 18-day average. Need I tell you? You went right to it. Held it, and you still don't have a story. You have a lower low now and a higher high. You are not trending. You're stuck in between the top quadrant of the 18-day average and the lower Bollinger Band, and momentum is not helping you. It's just sort of drifting in the water. When we go to the Eurocurrency, it's the flip-flop of it. It made its run. It did not hit the upper Bollinger Band. You had a big move like this. You had a pattern of lower highs, lower low, fighting right at the 18-day average. What you don't want to get over if you're a bear is right here. I'm going to ask the bigger question. Why go into the Fed speech at 8:10 in the morning from Fed Chair Powell? We know it's going to be a policy speech. He had telegraphed that, but traders do it. The algorithms come out, they step on you, and then they step again, and you wonder what happened. Let me tell you what happens. If you're trying to beat the algos on a major report, and I get these questions asked to me on my YouTube page, and people will write me. Don't. It is no different than when I was in the pits. When I was a runner, you'd wait for the reports, you'd see the flurry, it fades away, it goes back and forth for a bit, and then it settles in. If you want to trade that flurry, great. How are you going to beat the computer speed? In your eye blink, their orders go in and out. Their eye blink. You can't enter, you can't type as fast as they're just programmed in off their high-speed lines, and it's just flying. So you adjust to them. and adjusted them by backing away. This is a futures market. This is not an investment. This is about trading. If you think it's investment, wonderful. I have a different attitude on futures. I have a different attitude, the same attitude on ETFs and spiders. They're trading vehicles. Stocks are investment vehicles. Different world. Okay, so I look at it like that, and that's what I'm seeing in the market there. In the yen, I see a bear case develop. Lower highs, lower lows. Now, I don't like when a number's under 30. I think it's oversold. So I don't think the pros are going to be overly aggressive in trying to press the 18-day average and defend that position because of the oversold condition. If it weren't, I would think they would. Let's assume the market continues falling. The first support is the green line, the 100-day, and you can see it was important back here. Why wouldn't it be important again with resistance up there? And of course the Bollinger Band. Keep it in the back of your mind, you're already oversold. Bitcoin, you're in a downtrend that back here and again here. It's found support at the Bollinger Band. I think the pros have taken their shorts off. That doesn't mean they're not holding some, but you're oversold, you're under this, and you've already hit those targets. The differential between OCC Brent and WTI. Now you got to leave tomorrow. October, it's the last trading day for the October contract. But you're now near the lows, back to the $2 mark. $3 to $2 has been what it's trading between. And I have told you I am petrified of these charts in the sense that they don't break out one way or the other. They just play with your head. And here's the November. It's no different than the OCT. It's playing with you. Back and forth action that's going nowhere. Now momentum's pointing down. You've got a higher high, lower low, and you keep fighting against the 18-day average. Trying to make sense out of that? Why? Doing the same thing in October WTI, not doing anything that's a trend. Gasoline warned us the other day. This was gasoline right here. This is coming now at the end of the day today. Here's gasoline fighting, has its resistance up there. It gave us a lower high, and all of a sudden today, with the storm and all, right? We shouldn't have seen that. How many traders got killed here trying to play the old days? I'm going to buy crude because it's getting a hurricane into the Gulf. And I told you, the world has changed. There's just so much more oil onshore than offshore. That used to work. It's no longer the play. You've got to have some years of experience. And all you did is go back to the neutral number of the 18-day average and stall there. But the play has been the nat gas, which has stayed over the 18-day average. It stepped out of its trend, but it's not lost its embedded reading. So this market, until it loses that, has that bullish bias that's running for it. If this makes sense to you, you want to see my morning updates. Why? Because I really explain in detail and get a chance to add, number one, some more studies for you. They're in there, much more specific. Say things that I cannot say here. People ask why on these videos I'm not telling you buy here and sell there. I'm a registered broker. We are not allowed to do so to the general public. We are allowed to do so via paid subscribers or a short-term list of people that have to have a password and user ID with all the necessary disclaimers in front of it. Whether you like it or not, I like making my living, and I want to pay attention to the rules, and I want to pay attention to them. Dot the I, cross the T. That's what I want to do, and I'm going to do that. I cover all this in detail with specific buy and sell there. It's a 20-minute video in the morning. I really cover a lot of territory. I start recording at 5:40 a.m. I cover what's going on in Asia, what's going on in Europe, back to America with the reports of the day, what I think, should you go through them? Because not all reports are big ones. You don't get out of the market for every report. For a Fed policy speech, are you crazy? You get out of the market. You wait and see what it's going to do. That's at least my opinion. So, in looking at it, $7.95. Your cup of coffee that lasts you 15 minutes at Starbucks, or your fancy drink there, and you get 30 days of this. Give it a try. All you need to do is go to our website, go to the word research. It's right there. I'm Ira Epstein. Thanks for giving me this time. I'll see you tomorrow.